Hi guys, it's Ian from Educate to Accumulate E2A. It is Wednesday the 16th of February 2022. It's 10:45 in the morning in the UK. We've been talking in the Telegram group this morning about the fact that boredom can be an account killer. Basically, I get very frustrated when I'm waiting for setup. Sometimes in the past, I've been known to sort of jump the gun, see currency pairs moving early or earlier than I expected, and then I jump in only to see them actually to move up towards my levels or my original entry levels. So I've actually been listening to an audio book over the last couple of days called The Bulletproof Trader, which I'm really enjoying, and it's by Steve Ward, and I believe that's going to do me quite a lot of favors with regards to getting my psychological insight, if you like, on my psychological stance sorted out. I have read a lot of books on psychology. Trading in the Zone is probably one of my favorite ones, but I'm enjoying Steve Ward's book. It is very good. So anyway, what's been going on? Well, we were lucky enough to get on a sterling against US dollar long trade. That has been closed out. We also were lucky enough to get on a Euro Swiss long trade. That's also been closed out. So at the moment, I have a flat book, but I do have two resting orders today, and they're both based around the euro. I've got the euro against the US dollar, and I've also got euro sterling resting order. So let's get to the charts. Let's have a look at the trades that we did have on. So sterling against US dollar. Let's talk about this. We were lucky enough to sort of catch this dip here. So looking at this formation, let's move it to 120. It's a bit crowded. So we knew we had support down here to make this cipher pattern to take us down to this level here. And we've got this dotted line here. Why have we got this dotted line? Well, it makes another pattern. So although we were sort of bought in, I think it was 96, we're lucky enough to get into yesterday. Posted a little bit late in the room, Telegram room, so I'm not quite sure where or if anybody followed it. But now looking at this sort of pattern, so we get patterns within patterns. So spoke this morning about the fact that I was quite happy to take profit. I think this little move up here is a spoof, if you like, and looking at the dollar has got very limited amounts of room to move to the downside, so this will probably hold. But you might be saying, well, why aren't you taking sterling dollar to the downside? I will do when it gets up here. I don't want to take it here. And also looking at the single currency charts, sterling I prefer to buy into, hence the long trade down here and not taking the short trade there. So that was sterling against US dollar. That will be monitored for a potential sell trade up here. Euro Swiss, and again, let's just take that down to a 60-minute time frame. And this was the chart that gave us our long trade. So we had support in the euro. We didn't really have anything in Swiss franc, but we had a nice support level in the euro at the same time that euro against the Swiss franc hit this, which was 104.42. That was a long entry. I actually got out yesterday around about 104.90, and we have seen a continued move to the upside. Again, on these corrective legs, the BC legs, and why did I get out at 104.90? That's probably what I should be explaining here. Let's just drop that down. Now, I got it out at 104.90 because I saw this rejection here. Basically, the BC legs in cipher patterns are the hardest patterns to trade because sometimes we'll only pull back to 38.2, and sometimes we'll pull back all the way to 88.6, and sometimes we'll just be in the middle. So you have to sort of break down that inside wave like we have done just previously in sterling against the US dollar. But when we got up to these sort of levels, the 38.2% pullback, Swiss had hit an important level. So I was quite happy to take profit. And I did see a move to the downside, and I could have re-executed a long trade, but didn't. And like I said, I'm sort of sitting on my hands at the moment. So that sterling dollar which is still in the pipeline for selling at higher levels. This is Euro Swiss, which is still in the pipeline for selling at higher levels now. Euro against the US dollar, we've got this dotted line here. Now you can see on this time frame, and I break down all these time frames, that's something I should explain. So we've got a monthly chart, weekly chart, daily chart, 8 hour, 4 hour, and hourly. And you've got to remember the big picture, okay? The big picture analysis is still for a move to the upside as opposed in this euro against US dollar chart. Now this is a weekly chart. We can see a bullish outside candle there, and we can see that the Marabuzzo level, which is the 50% pullback level of that strong candle, has held, and it's taken us higher. But you can't trade off one time frame, you've got to look at multiple time frames. And here I've got some resistance. So noted this in the room this morning. I've got two resistance levels, 113.98 and 114.03. I will take this trade, and I'll take this trade because I've got euro hitting resistance, I've got the dollar hitting support, and I've got euro dollar hitting resistance. So I'm looking for this pattern to form, and that's why I've basically got two entry levels. So I've got 4 units that I'm trying to sell. One's at 113.98 and one's at 114.03. I will know if I get triggered that it's a corrective leg to the downside, and I've got support down here at 112.90. So with a stop again above the 61.8 level, sorry. Let's say if I average in, so put me in the middle, stop above here. I'm still giving myself, oh my goodness, gonna have to move that 666. Not that so let's say it's 6-1 with regards to risk reward for a move to the downside. So all of these cipher patterns, if we catch them, they do offer decent R, even if we don't end up with getting bleeders out of them. They do give decent setups. So that's euro against the US dollar, euro sterling. Big picture analysis is this chart. So we can see that we're moving lower in 5-wave pattern. This 4th wave has not breached the bottom of 1 wave, but more importantly, this makes a back formation. So a further drive to the downside. So 1, 2, 3, 4, 5. This drive 5 comes down to complete this 5th wave. What going to a shorter time frame, the last move up can be seen in 5 waves. Why haven't I executed the trade yet? Well, the reason I haven't executed the trade yet is because 84.05 is prime resistance. It's a 261.8% short-term fib level. Also, euro has hit resistance, but sterling has not hit support. So there's still scope for euro sterling to move higher to that level. Again, this is offering decent setups when we go to this chart here, and going back to this chart, the 4-hour chart, because say we do get in at 84.04, which is here, and our target 261.8%. What can't a 4th wave do? Because we're sort of playing 2 patterns here. Well, what a 4th wave can't do, it can't breach the top of, the bottom of wave 1. So wave 1 is here, which is 84.13. So we can get a 12 tick stop with a spread, and that again is giving us risk reward factors, or the R rate, of around about 7.8 to 1. So all of these trades, these setups, we don't have to get them all right. We've had a very good run lately, but with risk reward setups of 7 to 1, 6 to 1, some of them are 13 to 1, some of them are 12 to 1. Our money management doesn't have to be as strict as it normally would be. And here, because of limited stop, I obviously increase my trade size. So my trade size is 6 units on euro sterling, whereas in euro against the US dollar, it's only in 4 units. Okay, guys, going to leave it there. If you do like the videos, please like them. If you don't like them, please let me know why you don't like them. If you want to see more videos along the same sort of ideas, then please subscribe to the YouTube channel. It's Educate to Accumulate, the 2 being the number 2. Also, we've got the Telegram chat. Please come and join us. There's a link in the YouTube narrative or wording. Okay, guys, good luck, and I'll speak to you again soon. Many thanks.